Hello everybody, this is Lara at pureelliottwave.com with today's free analysis working through my list. This is BEPRO. Are you supposed to pronounce it like that, BEPRO, or are you supposed to say BEPRO? But anyway, I'll call it BEPRO Network. I've got 6 analysis on my list remaining after this one, so hopefully I'll get that done within a week. Yay, I'm excited. I'm excited to finally not have that list that weighed so heavily on me. I can see a really nice 5 up from this low to this high. I'm going to do an Elliott wave count on this, and then I'm going to jump over and do some classic technical analysis. Let's put this, let's see, how long did this last from? This was December 2020 to March 2021, so under a year. Okay, so less than a year, so I would label that primary degree. Now, I've got a new analyst in training, and one of the things he's finding hardest, he told me, is figuring out what degree of labeling to give a new movement, and that's how you do it. How long did the movement last, and then go to those guidelines of how long each degree should last, and then use the appropriate degree. So you can find those guidelines at the bottom of my website. There is a free giveaway, Elliott Wave Notation. If you click on that, you can download it. So just click there to download. So if it's lasted less than 1 year, then it would be, intermediate would not be long enough. Primary looks like it's about right. So I'm going to label this move from this low to this high at primary degree. So I'm going to change the degree here to primary and get this out of the way up here. I'm going to label this primary wave 1. If it had lasted a year or longer, I would have labelled it cycle degree, back to those guidelines. Cycle degree is 1 to several years, but it's under a year, so I'm going to label it primary. And the question for this analysis is going to be, is the low for primary wave 2 in? First up, we have a nice clean 5 up here. Yep, that's how I'd label it. That looks like a pretty good 5 wave up impulse, and intermediate 2 has lasted 4 weeks, intermediate 4 has lasted about 1 week. That looks about right. Fourth waves are commonly more brief than their counterpart second waves. I'm going to label primary wave 2 as zigzag because this first big movement down from this low, this high to this low, this looks like possibly a fairly good looking 5 wave structure. I'll need to check that at lower time frames, but I think it's a 5, which means this should be a zigzag, which means the focus is going to be on checking that A does subdivide as a 5 and then finding out if C is a complete 5. Because if A won't subdivide as a 5, if it only subdivides as a 3, then this is how you have to label it. A double zigzag. So if this first move down here is a 3, then primary 2 is a double zigzag. And that means that intermediate Y has to subdivide as a 3-wave structure, a zigzag. So it's going to be quite material because it's going to be whether or not you can see this last move down here. If it's a 5 or a 3, the subdivisions are going to be different. Is it going to be complete? So let's have a look at the 5-wave structure first, and then we'll see if it fits, and if it doesn't, we'll try a 3. Oh, okay, yeah, that's interesting. Maybe I would label it like that. Yeah, I would. That's actually pretty good. And is the final 5th wave going to be over? Okay, I'm going to save that weekly chart, and I'm going to create a daily chart from it, basing it on my primary analysis. Here we are at the daily chart level. I'm not going to spend any time on primary wave 1. It looks like a really good 5-wave structure. I need to spend the most time on primary wave 2. Let's bring in MACD to help with the wave count as a measure of momentum. Okay, I'm disagreeing with how these labels are put here, and MACD says the strongest momentum is probably down here, so I think the 3rd wave is over down here. Nope, like this. I think also minute 2 may have been an expanded flat, minute 4 a quick zigzag. I'm just wondering if minor 4 could have been a triangle. I think I might actually need to move this all over down here and this here. And now we can see an impulse for the 3rd wave. Oh no, because now that's got a truncated 5th wave. I'm not sure if I like that. Let's check to see if the first wave subdivides correctly here, because that might make a change to how I see the third wave. I think I have to see this over here. No, that's going to be a 3-wave structure. This isn't working very well. Is minute 1 going to be a leading diagonal? I think it could be a leading contracting diagonal. Yes, it fits actually quite nicely. Always put the trend lines on your diagonal to indicate that's what it is, and the first wave has to be over here. Yeah, that actually looks pretty good. I don't want to see the middle of the third wave anywhere but here. This has got the strongest momentum. MACD has got the strongest momentum down here, and then the strongest portion of the histogram, it's right here actually. So this is the middle of the third wave. I'm just concerned that this piece doesn't subdivide well. It has to be an impulse. Will it fit? No, because there's an overlap here. And it would fit if I don't want to do that. And you can't see the third wave as anything other than an impulse. So what if minor wave 1 is a leading diagonal? I'm just checking the wavelengths. Yes, yes, it does work, but do the trend lines converge? Oh, they look like they're actually diverging. Let's check that. Oh no, they're diverging, so that doesn't actually work. And no, that's not going to work either. Oh, actually it might. Oh, actually, a leading contracting diagonal. Checking the wavelengths. Yes, they all... Okay, that's perfect. Okay, so wave 1 could be a leading contracting diagonal. Wave 2, an expanded flat. That actually looks pretty good. Wave 3 works. Okay, now what about this? I think here maybe this is a triangle. Yep, that looks actually pretty good. Yeah, okay, so intermediate A fits really nicely as a 5-wave impulse. Intermediate B, it's probably a double zigzag, and I don't want to spend too much time on that. Okay, let's check intermediate C. Now the question is going to be, could intermediate C be over? Let's squish up so we can see all of it. Where's the strongest momentum? In the first wave. And momentum's weakening as it continues lower. Okay, so long as the third wave isn't the weakest, just like the third wave shouldn't be the shortest, it shouldn't be the weakest either. I think this is going to be okay to see. I can see other ways to label it, but let's work with what we've got so far that I worked out from the weekly chart. First concern here is minute wave 1 going to subdivide as an impulse. It'll work if I see the first wave over here and the second wave an expanded flat. So the first wave has its low at 0.011214. The fourth wave has its high at 0.010775. There's no overlap. The rule that I'm applying here is wave 4 may not overlap wave 1 price territory. The second wave can be an expanded flat or combination with part of it that moves beyond its start. And the fourth wave is not overlapping wave 1 price territory. The rule is met. Motive wave says that there's a problem that the fourth wave is overlapping second wave price territory. That's wrong. The rule is really clear. Wave 4 may not overlap wave 1. So when motive wave does that to me, I ignore it, because, sorry guys, that's just wrong. Minute 2 looks like some kind of double zigzag, or maybe even a triple zigzag. I don't want to spend time on that because it's obviously over. There is going to be no problem whatsoever with seeing minute 3 as an impulse. There's not a lot of overlapping here. Some people seem to have a problem with this. This second wave correction has lasted 10 days, whereas this second wave correction a degree higher has only lasted 1 day, and here this one's lasted 5 days. Sometimes that's just how it works. Sometimes a later correction is longer lasting than a previous correction. And because it's a later correction, it's usually, not always, but usually a lower degree. That's just how markets unfold sometimes, and that's okay. Those guidelines regarding how long each of these degrees should last are rough guidelines only because, and this is why, you have to approach those with a great degree of flexibility. When a third wave extends, as this third wave here, minuet degree, has extended, they do so in price and time. It's like taking an accordion, which is compressed, and then stretching it out. When you stretch out the accordion, you can see the folds within it as they get stretched out. You can see the lower degree waves as they get stretched in terms of price and time. And so when they get stretched in price and time, they're going to take longer because of the extension. And so because they're going to take longer, you have to be really quite flexible with these guidelines as to how long those degrees should last. I hope someone's learning something, and I hope my analyst in training is going to watch this. I'll let him know it's here, and I hope he learns. I'm really excited for him to join me, hopefully next year, which is going to be really exciting, and I'll be able to hopefully offer you more markets on a regular basis. I think that looks like an average, possible, okay looking leading diagonal. Yep. Okay. I don't think there's going to be any problem with this third wave, and the middle of it looks like it's here, using MACD as a guide for momentum. I think here's the middle of it, and we're going to see a series of first and second waves here, middle of it, third and fourth waves here, end of it. I'm not going to put the labels in there because I just need to have a look at this fifth wave. That's where I want to spend the time. Could it be an ending diagonal? Ending contracting diagonal? Ooh, motive wave says no. Could it be 1, 2 over here? Could 3 be over here? I'm just looking at this. Is this high? 001318? 00130. Oh, this is higher, so this isn't going to work. So 3 is longer than 1, 4 is shorter than 2. Oh, okay. It's not going to work. Could minor wave 4 have been a triangle? Yeah, it could have, and it could have been over here, but I think that might be a little bit forced. Let's have a look and see if the wavelengths, if the channel works. Oh, actually, that does look okay. Okay, yeah, I'll leave that there. And so, could the fifth wave be over though? I don't think so. Nope, motive wave says nope, can't see it. Excuse me. Well, I think I can see it if I see 1 over here and 2 over here. And now 4 doesn't overlap 1. And 2 has actually a pretty good fit. This downward movement here now looks like a 3-wave structure, and this upward movement here now looks like a 5-wave structure. And 4, the height of 4, 0.001052, 0.001046 is overlapping first wave price territory. Okay, the third wave, yeah, no, okay, so it won't work. Okay, the conclusion is the fifth wave is incomplete. I can't see a complete structure there. And so let's see if it's unfolding as an impulse and it's incomplete. Well, then that actually means an increase in downward momentum. I would have this over here in minuet 2, possibly some kind of double combination or double flat. So a third wave at 2 degrees at minuet and minute degree within a fifth wave needs to unfold lower. And then a couple of bounces or consolidations for the fourth waves have to remain below their respective first wave price territory. So this price point for the last of them, and the nearest, this price point. Let's have a look at some technicals. We're going to look at this low and then this low on the weekly chart and the daily chart to compare and contrast. At the weekly chart level, this low, December 2020, at this low, there's a really strong bullish engulfing candlestick pattern, and that led into this bull market. At the height of the bull market, there was no bearish candlestick reversal pattern. The bullish engulfing candlestick pattern did have push from volume. I just had to pull over to the right to get rid of this because it's just obscuring. You can see it here. It has push from volume. So this bullish candlestick pattern was a good indication of the end of that short-lived prior bear market and the start of a good bull market. At the low, on-balance volume had been making higher lows as price made lower lows, so there was some bullish divergence there. ADX did not indicate a trend, it was declining. RSI also made higher lows while price made lower lows from its start. But I think I'd rather just read this, actually. I don't want to include this very earliest part. I think let's just read this and say that there was no bullish divergence between price and RSI, nor was there between price and money flow index. ATR at the end of the bear market, strong decline. There was weakness at the end of that bear market, so declining volatility, and stochastics was oversold. As the bull market unfolded, stochastics increased and ATR strongly increased, so volatility for this market is to the upside. At the daily chart level, this low is the 26th of December 2020, and there's a bullish engulfing candlestick pattern on the daily chart as well as the weekly, and they both have pushed from volume, so that was very bullish. Volume strong up off that low. In initial days of that bull market, there was bullish divergence between price and on-balance volume, probably double bullish divergence at that low. ADX was declining, telling us that there was no clear trend at the low. For the previous part of the bear market, it had reached extreme, but not very extreme. It reached very extreme for the previous bull market. RSI at the low did not reach oversold, exhibited multiple long-term bullish divergence between price from this low back here along through here. That is really bullish, but the problem is it's really hard to help you identify when the low forms. You could have said back here that there was strong bullish divergence and that the bear market should be over, and yet it continued lower. So RSI is helpful, but it's not particularly good in timing. Long-term bullish divergence between price and money flow index as well. And ATR at the end of the bear market declining. A decline in volatility. It increases through a counter-trend bounce within the bear market as price moved higher. ATR increased. Strong volatility to the upside for BEPRO. And at the end of the bear market, stochastics oversold and also exhibited bullish divergence. Over to the current low now, and the last low here, 0.000903, week beginning 23rd of October. There's support here about 0.000919, below that 547, below that 339. There's a strong bullish engulfing candlestick pattern. Has this happened before in this bear market? So here's the end of the bull market. Bullish engulfing candlestick pattern here did not lead to much, only a sideways movement for 2 weeks before the bear market continued. Bullish engulfing candlestick pattern here, strong morning doji star, did lead to a strong bounce, but not the end of the bear market. No bullish, or this could be a piercing pattern. This is probably not enough to be a piercing pattern. Bullish engulfing candlestick pattern here and a hammer candlestick pattern here did lead to a reasonable bounce, but not the end of the bear market. Piercing pattern here led to some sideways movement. Now a fairly strong bullish engulfing candlestick pattern. Does it have push from volume? Volume 1.6 million, the previous week 1.6. Can we see if volume is very slightly higher? Yeah, the numbers aren't telling us the full story. Yes, there is a little bit of a push from volume for that bullish candlestick pattern. So the low could be in, but not definitive. There is bullish divergence between price and on-balance volume. On-balance volume is in a small range. I'd be drawing trend lines. I'd draw my trend line like that. On-balance volume is at resistance. It may assist to halt a rise in price. And if that resistance line is breached, that would be a reasonable bullish signal. So there's quite a narrow range for on-balance volume. A break above resistance would give a bullish signal. A break below support would give a bearish signal. No signal yet at the weekly chart level. At the daily chart, ADX is declining. The previous downward trend, the bear market, ADX hasn't caught up at the weekly chart level. It's telling us there's no clear trend and the DX lines are whipsawing. RSI hasn't reached oversold. ADX is not extreme. There's plenty of room for the bear market to continue. Money flow index has reached oversold. Here on this week the close is 0.001258 and here the close 0.001218. Price is closing lower, money flow index is moving higher. There's some short-term bullish divergence. Has money flow reached oversold before? Oh, not that deeply, so that's actually pretty bullish. I'd prefer if RSI had reached oversold as well, but it didn't, and ADX wasn't extreme. ATR declining and now flat, normal for a bear market for BEPRO, and some bullish divergence between price and stochastics. So that's the weekly chart. Finally, the daily. At the daily chart level, there is also a bullish piercing pattern. It does have push from volume, but we've seen strong bullish candlestick patterns at the daily chart before with strong push from volume, and they didn't lead to anything. Here's another bullish candlestick reversal pattern with a little bit of push from volume, and it had follow through as well for a few days, yet the bear market continues. So on its own, this is not evidence that the bear market should be over. It's happened before a few times for BEPRO, and it hasn't led to the end of the bear market. A reasonable increase in volume for that bullish engulfing candlestick pattern, but this one back here also had really strong push from volume. On balance, volume would have broken below a support line that you could have drawn here, bearish signal, bullish signal, now back probably at support if we put a line across here. I don't want to do that. On balance, volume making lower lows with price, no bullish divergence. ADX currently declining and the DX lines whipsawing, no clear trend. Previously, the downward trends reached extreme, but not very extreme. RSI, some good strong bullish divergence here. The close, 0.001562. 0.001142, 0.001062, and 0.000913. So there's long-term bullish divergence between price and RSI. We've seen this happen before, and yet the bear market continued, and the bullish divergence developed further before the bear market was over. But and it could happen again here, but it could be an early warning sign. This could develop further before the bear market is over. It's telling us that there's weakness and downward movement in price, which is telling us that the bear market will end, but it's not telling us that it's over now. Bullish divergence also between price and money flow index, and ATR very flat, stochastics neutral. I think because ADX isn't telling us that this trend is extreme, I think that there's plenty of room to go for that bear market to continue. It is starting to get weak. You would expect to see that weakness as it comes to an end. Let's look again at the weekly chart. I'm concerned about two things. ADX doesn't even indicate a downward trend. It hasn't even caught up with the trend change months ago from bull to bear. And RSI hasn't reached oversold. There's plenty of room to go for this before this bear market's over. There's some early warning signs. It could be weakening. It could be coming toward an end, but there's not enough technical indication to tell me that the bear market is over here. And so I think I'm okay with this wave count. I'm not sure about the increase in downward momentum for the short term. That's the expectation if this is moving to the middle of a third wave at a low degree. But I am fairly confident that the bear market is probably not over. I just can't tell you exactly how much further it's got to go. All I can tell you is that this is the invalidation point for the Elliott wave count, 0.000337. Not particularly useful because it's still a ways away, but that's the invalidation point. Okay, that's my analysis for BEPRO. Coming up next, ENJ, AMP, and then DENT as I work through that list, which is nearly finished. Thank you so much for watching. Thank you so very much for the support from all of my membership at Pure Elliott Wave and all of my subscribers and commenters on the YouTube channel, and all the Coins Kid crew for all your support. Again, thank you so much. I really appreciate you guys.